My question relates to the Kinder Morgan pipeline. Given that China is quickly converting to solar energy for a large part of their needs, and given that the overall world supply or demand is, you're predicting to go down, I mean, does this big battle between the two provinces really matter if Kinder Morgan decides it's not worth building this?
Well, I think the beef that Alberta has is really simply this, that because they don't have an option except to sell to the Americans, they basically are not getting a global price for their oil. If they were actually getting 65 US for oil, they wouldn't really be, have their knickers in a knot about this. This is an issue of giving them an alternative to the marketplace that they have now. And it's an interesting thing because Canada produces more or less slightly more oil than it actually consumes. But we import maybe 1 million barrels of oil back east, and of course we don't have an east-west pipeline either for oil. So from the Albertans' perspective, they're simply saying, we produce it and we'd like to get world prices for it, which doesn't seem totally unreasonable. Interestingly, in the case, and this is something I found out just 2 days ago, do you have any idea what the largest coal terminal is in the world? Yeah, Delta. 36 million tons a year, more than any other port in North America. So we in BC have the luxury of being able to ship unrestricted at global prices all the coal that we want. So I sort of understand why Alberta would be saying, well, okay, it is still one country, and we have permission to go ahead and do this. And so I think at some point in time, hopefully, rational minds will prevail in terms of selling the resources. Even if 20 years from now, the need for that oil is diminished, the reality is that Alberta is dealing with the current situation today. At least, that's my personal view.
The only thing I would add is that, John talks about alternative energy. It's the adoption rate that will be key. And I think if you look at a lot of the forecasts, oil demand is still forecast to go up, and even later on it may level off. And depending on how fast alternative gets hold. But economic growth, global economic growth, is going to require more oil. The other thing is you think, well, when we need less oil, what you want to avoid is the high cost areas. And oil sands, when you look at the total project cost, is a high cost source of oil. But it's only because it costs a lot of money to actually put the infrastructure in. Once the infrastructure is there, you've got a lot of sunk costs. Your variable costs are not as great. So oil sands is still a very viable energy source. And quite frankly, I mean, if it doesn't come out through the Kinder Morgan, where it's going to be coming out is by rail, or which is worse, I would say. So I still think there is a need for it, and I think John's right. You see it certainly in the market right now, because the discount to WTI oil on the Western Canadian Select is $20 or so. It's quite significant and costing Alberta billions.